Nigeria's fixed income market was bearish this week due to foreign portfolio investor sales and the new PENCOM regulations. Well, that's according to Joy Iyayi, a fixed income trader at UBA. Well, she joins us now for more on that. Joy, thank you so much for joining us today.
Good afternoon.
Help us understand how the new PENCOM regulations contributed to the bearish trading we saw this week.
Sorry?
Help us understand how the new PENCOM regulations contributed to the bearish trading at the market this week.
Okay, the new pension regulation has led to a bearish trend that has been witnessed in the fixed income space this week, specifically in the treasury bills markets, where on the short end of the yield curve of that segment, actually, we've seen market players actually selling off their positions, and this we found out that actually demand from PFAs to actually unwind their positions slightly, as some of them have actually exited the fund, their quota for the fixed income aspects of the fund. So that's for the bearish sentiment in the fixed income space this week. We saw an increase in yields on the short end by an average of 50 basis points week on week. So that has been what happened in the fixed income space this week.
Okay, so still staying with the fixed income space, pension fund managers weren't the only people selling off. Foreign portfolio investors also joined the bandwagon, selling some of their fixed income instruments too. Do you think that this is still because of the general trend that we're seeing in the emerging markets, or is there something different that's happening? I know the US Fed wants to raise, or has signaled that it's going to raise rates twice this year. So do you think it's a bit more of that, or is there something new that's going on?
Yeah, foreign portfolio investors are gradually unwinding their investments in Nigerian markets. This is expected because this is pre-election year, and this is going to continue going into the election year into 2019. And also a contributing factor to the unwinding of position by FPIs is also due to the fact that Fed actually hiked rates from 1.75% to 2%. So that makes that space quite attractive for them. And given the level of risk in our own markets, so I think they're gradually unwinding to invest some of their, to invest slightly in the foreign markets, and when there's stability returns in our own markets, we think they will come back to invest here.
Now, Joy, as you know, we're going into a new quarter and a new trading month from next week, Monday. What are your thoughts in terms of how trading will pan out? Are we going to see most of the highlights of this quarter and this month also play out again in July?
Going into the new quarter in July, I expect that the sell-off will continue, especially on the short end of the yield curve. It's going to continue into the end of the third quarter. However, the increase in spending by the government, budgets, release and everything is going to provide some respite to system liquidity. So that should actually not take rates as high as up to 13. We expect rates to still be around 12.5 levels to close to 13, but we don't think for now rates will go above 13%.
Well, thank you so much for your time today. We've been speaking to Joy Iyayi. She's a fixed income trader at UBA.